guys.
Best clacking ever.
I'm back.
We are back.
Thank you very much.
I'm back with it.
Enjoy the show.
Thank you for that. Excellent clacking.
Clapping?
Do you want to close the door? No, just leave it
Yeah,
open.
probably should.
Okay. Sorry, we've been told we shouldn't be joking about things you can't see on camera, but the door was open.
Yeah, hilarious. I don't know. And people can't even imagine that. Like imagining a door open.
Here we are. You know what? There's nothing else to talk about because the market's dead. Bitcoin is down. There's only one. It's only. You know what's worse than being a Bitcoin holder?
What?
An Ethereum holder.
As
Yeah,
usual.
we're down for four straight weeks.
No, months, I think.
Months.
Months. Yeah, and Ethereum's like going on 6, I think. Those guys are in struggle town. I've got a great quote that some guy put out like in the last few days that kind of really encapsulates how bearish we are at the moment. He says, and I didn't even attribute it to him because I don't want to, but he says, with investors at breaking point, another forced liquidation could extinguish remaining hope entirely, leading to a total exodus from the market. God damn.
Cue the Bitcoin.
Yeah.
Cue the Bitcoin obituaries already.
Yes.
It's crazy. Here we are. It's like Bitcoin. It's at 68,000
Yeah.
US.
He's bullish or not?
Yeah, no, this guy thinks it's
madness,
done, it's
madness.
over. But I think he's like working for a crypto adjacent sort of company. So it's not like he's some, TradFi guy doing the obituary. It's,
Okay, we're slightly behind the last all-time high, but it's not.
no.
It's all over. Hey, look, there is a bright spot. Coinbase says that retail users are buying the dips. So the ants, the
thanks,
people have
Coinbase.
come back out. We're no longer the whales. They have been sitting on the sideline, I guess.
So we weren't here last week. You were in
Hong Kong.
But before that, I think that was kind of the theme we were talking about back then as well. So what we were seeing across the OTC desk was a lot of retail buying coming in. And I'm guessing Coinbase saw the same thing. But it hasn't done much at the moment. We've been still 2 weeks later. We're still stuck in the same channel, basically between sort of 61 and 70k US. Anyway, tell us about Hong Kong.
Well, Hong Kong was good. The mood, unsurprisingly, was a little bit down.
Was the price in Hong Kong also down, or?
I believe so.
Oh,
I didn't. I was. Well, look. While I was there, I wasn't really checking it. So I was at Consensus in Hong Kong for last week. It was. I guess the mood was overall, as you can imagine, the retail sentiment was pretty dour. We've seen the fear and greed index at 12, so apparently that means extreme fear for the one eventually when I get around to understanding what it means. But the side events where all the action happens, I should say, people were still there was still some bright spots and people were still generally pretty positive. So those professionals in the room, when I say professionals, I guess people who work in the industry and are looking at this from a longer term perspective, we're all still pretty positive around the way the industry is going and the way things like regulation are coming along. Most of the talk actually focused around who was selling. That was the big question.
Right.
So I had a bunch of conversations, a bunch of Bitcoin OGs, a bunch of traders, and everyone kind of said, someone is selling. Someone is selling, obviously, to point out the obvious. Someone has been selling indiscriminately, but no one can really work out who. And so the best guess is it's not really the institution, the Americans that are really selling. You don't even see necessarily a lot of selling out of Asia. So they're like, well, somebody on Binance has just got a ton of Bitcoin and is just dumping at any price, which is leading to speculation. Who could that indiscriminate seller be? Some people were looking at, and here's where it got interesting. Some people were actually pointing their finger at Venezuela. Yep.
Right.
Some people pointing their finger at Iran, saying that sanctions and a few of the issues meant that they just had to get out, because there had been talk at least.
It'd be, that brings up an interesting point though, because Iran is a sanctioned country. How, they'd have to do some fancy footwork to sell, especially if you're selling in size, the size that we've kind of been seeing, like something that's pushing the market down this quickly. How do they do that?
Good question. I don't know, because this the thing was pure speculation.
Certainly not an independent reserve. We would never allow that kind of selling. We disabled the selling button for those guys.
Yeah, exactly.
They can't sell. Yeah.
Yeah, and the apply for an account button.
That too. Yes.
Yeah. So that was a lot of the talk. Hey, look, tokenization is the big theme right now.
Right.
And tokenization is steaming ahead. Payments, particularly in the Web3 space, is just absolutely moving from strength to strength. And so, look, if you're looking at it from a purely retail perspective, hey, my bags are down. Oh man, I got too much Ethereum. Yeah, okay, you're pretty unhappy. But for a lot of the Jared's mate, Charles Hoskinson, was there. Interviews everywhere. Sent him a photo, some live action photos.
Did you have a girlfriend?
No.
He's not as fat at the moment. Still nerdy though.
Not as fat.
You didn't see him in real life.
Yeah. The camera takes
The
off
camera
10
adds
pounds.
50 pounds.
But he was there, and some other notes. Well, actually, Tom Lee was there. Tom Lee was there talking up his collaboration
Do you
with
look
Mr.
homeless? Or?
Oh, I guess give him another few months. He didn't talk about his bags being down, and he focused for his talk. It was actually pretty good.
Yeah,
He was focusing on his collaboration with Mr. Beast, which seems to be going.
Right.
He's after he hung his hat on Ethereum. That hasn't gone so well, but luckily he's got a spare hat which he can hang on his Mr. Beast collaboration. We'll see.
But I mean,
We'll
the two are very intertwined. Like at the end of the day, this guy's a massive ETH bull, and he's so long ETH at the moment. Yeah, it's. I wonder with those ones, right? You know that meme where it's like there's a mask that looks all happy, but you can see behind the mask it's like crying. It's like that's what's happening here. He's got that.
Yeah.
Yeah.
No, it was a good talk. It was a really good talk, and the meme. Surely everyone's seen the meme. We'll pull that up in a second. But yes, the vibe depending on who you spoke to, and there wasn't a lot of retail interest, I guess, in this particular event. So the numbers were probably down, and maybe the mood at the actual conference itself was a little bit down. Let's say, but the actual side events, and depending on which space, I'm gonna get it right, specifically you're in, there was definitely a lot of optimism around, I guess the long-term future.
Yeah. Okay.
As I said, particularly around payments and tokenization. So I know I'm going to talk a little bit about tokenization a bit later on, so I won't jump into it right now. Now, Nick, news from the desk. What have you got for us?
It's been a slow week. So as many of you know, this week or today and tomorrow, specifically Chinese New Year. Gong Fei Hat Choi to those who celebrate. Oh, there we go. I probably said it wrong. So the desk has been pretty quiet actually. We haven't seen huge flows either way. I think everyone's just settling in for a little quick holiday, and we expect, this happens every year, and we expect it to all be back up and running probably next week. People often will take the whole week off and do a thing. Yeah, they get two days off in a row, which is pretty fancy. We don't get that. So honestly, not too much to report from the desk. Mainly stables. Like a couple of weeks ago was more interesting, I think, when we really saw the drop. As I mentioned before, we had a bunch of retail buying, a lot of Bitcoin buying, but at the moment, we've just been holding. The price has just been holding for sort of 2 weeks now or more.
Waiting to see what's happening.
Yeah, no one's making any decisions.
All right. Well, I'm glad I went to that live cross for the OTC update.
Yeah.
All right, talking about non-events, let's jump into a few other things. So we have to talk about the Clarity Act, which again, it seems to be going nowhere.
Yeah.
Just like the Bitcoin price.
I mean, it was going. Yeah, that's right. That's what they structure it on. If the Bitcoin price goes down, then everyone stops talking.
Yeah. I don't think we'll see any action in the Clarity Act until Bitcoin's over 100 grand again.
Yeah, that's, and you might not be far from the truth there, right? Like people will get less interested as the price goes down. I remember back years and years and years ago when the exchange was kind of first starting, and we were applying to ASIC for licensing and saying, hey guys, we're doing this financial thing. We're going to be taking people's money like in deposits and offering a service. We want to make sure we're licensed properly. And I think 2 months later or something like that, Bitcoin dropped from $4,000 down to $2,000 or something like that. It was a big dump. Everyone's like, oh man, what's happening? Kind of like the vibes we're getting now. And ASIC calls up and says, okay, so Bitcoin's dead now, so you don't need that licensing anymore, right? It's like,
well, it's just like your mate, the analyst. He's still calling him another bit. Oh, I thought we're past the obituary stage, but I guess we're not.
Yeah, no, I don't think so. They're coming up all over the place. What were we talking about?
Oh, the Clarity stuff.
Oh, Clarity, yes, sorry. So Clarity, the lawmakers over there are trying to decide a bunch of stuff. They want to get this Clarity bill, which sort of solidifies more what the SEC and the CFTC's jurisdictions are in terms of crypto. So that's one of the important parts. One of the other important parts, and probably the biggest area of contention at the moment, is stablecoin yields.
Coinbase seems to be holding out.
Yeah, that's right. So Coinbase have kind of was it sort of mid-January or something? Coinbase basically said, no, we don't support this bill anymore. It's not right. And we would rather no bill than this bill kind of thing. We'd rather no legislation than the proposed legislation, which is kind of, a big deal to those guys they've been championing this thing for a long time now, and they suddenly dropped it just with the latest iteration. Old mate Besant, the Treasury secretaries, basically come in and called them all whingers and said there's a bunch of recalcitrants here that aren't towing the party line, and like, well, we're not part of the party. But it's kind of interesting. He's really trying to force them in line, make them do the right thing according to him, which is get this legislation across the line. What I think was really telling was he's sort of trying to like play play the players in this situation, and he's saying things like maybe if we had the bill, crypto wouldn't be going down so much. Like, he's literally saying stuff like that. It's like, if you guys had just put this bill in, maybe we wouldn't have this, this weakness in the market. And it's like, come on. He's trying to, play on people's emotions and stuff. It's not working for Coinbase. They're saying no thanks. Apparently, the banking I was going to say cartel, that's a bit rude. The guys in the banking side of this discussion presented a document that basically said, hey, no, there's going to be no, what was it called? I wrote it down. Yield and interest prohibition principles.
And this is the key point, right? This is the sticking point. It's the issue is really just around crypto providers being able to offer yield. Because the banks will say, no, that's what we'll do, thank you very much, and you cannot.
There are a bunch of different sort of things discussed in the bill, but that is really the sticking point, is the yield. And so, the banking guys presented this prohibition principles document saying, we prohibit you from offering yield to your customers through stablecoins. And the crypto guys were like, no thanks. And they offered the opposite, basically, and said, how about we, instead of not offering, we offer yield to our constituents or whatever. And the banking guys looked at him and were like, this is constructive. So it seems a bit like, what's going on here? Anyway, this is all, nothing has been officially said. It's all from like sources close to the truth and whatever, sources close to the people in charge and whatnot.
Sounds like the negotiation I have with trying to put my kids to bed, where I'm like, can you go to bed now? They're like, oh, let me have a think about it. I'm going to propose not going to bed.
Yeah. And you're like,
interesting point you raise.
Take it under consideration.
Yeah. How can banks do that? I mean, they don't have a monopoly on that type of service, do they?
Well, that's what they're effectively...
I think that's what they're trying to get.
Yeah, they would like one, thank you. And they're going to ask for it. And, if you don't ask, you don't get. So I totally get where they're coming from. And again, I can't remember if we discussed this last week, but it's kind of an interesting sort of balance here, right? So you got the banks saying, we don't want the crypto guys to be offering yield on stablecoins. And at the face of it, that sounds unfair, because it's like, hang on, why do you get to offer yield, but the crypto guys don't? Like, where's the difference? You're both holding things that are considered money, I suppose, thanks to the Genius Act that came in before. Like, everything's a bit more clear. But when you dig a bit deeper, there's sort of other things to consider, such as if people look at what's offered on Coinbase, Circle, USDC, whatever, and see, okay, they're getting around 3 to 4% yield on this thing, and they look at what they get in their banks, which is 0.1, 0.2% yield. There's a clear winner. Like, it's not even a contest, right? You'd immediately go for the USDC yield, assuming all else is equal, i.e. you need to make assumptions around the strength of the product and how are they going to last forever and all that kind of stuff. But assuming all is equal, 4% is clearly better than 0.1%. And if everyone then shifts over to this 4% yields thing, the banks suddenly don't have all of these deposits anymore, because all of that money gets shifted into this stablecoin system. And then what are the consequences of that? Well, there are real consequences. The banks suddenly don't have all of this free money that they can lend out to people who want to borrow it. And, that's, in one sense, that's not good in the first place. Like, why are they using our free money, paying us 0.1%, and then earning all this extra money, lending it out for much higher rates? But the fact is, this free money to the banks, where they can make cheaper loans, won't exist anymore. So, economic activity slows down, and, if you're a new business that wants to build a product, suddenly it's much more expensive to earn, to borrow money, and so maybe you don't do your thing anymore, and you know what I mean? Like, there's all these knock-on effects that are real, and that's what the banks are arguing. They're saying, like, this is systemic risk.
Well, what happens, just to flesh this out a little bit, let's say, for example, you're Coinbase, and you go, well, maybe I'll be a bank now, but I'll do the banking side of things with my digital tokens.
Yes.
And so now you're a bank, you're just offering it the exact same thing in a separate way.
Yep.
Wouldn't would this potential law affect that? So they're like the banks are effectively saying, we want to continue to do banking, but we just don't want to use your technology to do this. Because all that's really happening here is we have a new technology to do what the banks are already doing.
Yeah,
in a way, right?
Yes, and I think like what's happening is the Coinbases and Circles of the world are basically just replaying the bond yields that you get on Treasuries, and it's much higher than 0.1%. It's in the 3 to 4 range kind of thing. And they're basically giving it all back. They're giving most of it back to the customer and going, hey, look how exciting this is. And they're doing this play where they're just onboarding new customers and they're really trying to pull as many in as they can. The reality is if they were trying to be a bank, so they're going to not only take deposits, but they're going to be loaning money out as well. Their loans are either going to have a higher interest rate, which has the same issue as if the banks have no, free deposits, or they're going to have to take much less profit and have a super thin book and hope that they just can earn their money through scale. So there's no free lunch here. It's not like I don't think the banks are probably making a bunch of profit off this stuff.
But the banks are taking money, they're borrowing money from you, and they're lending it out. I guess the Coinbases of the world wouldn't really be offering necessarily lending it out. For example, they can put all their money into a US Treasuries, for example, and just pass those Treasuries on, and give their coin holders access to yield that those customers wouldn't otherwise get. Because I know we're going to talk about BUIDL, for example, in a little bit, and this kind of plays into that structure a little bit, I would have thought.
Yeah, I mean, I don't disagree with you that that's one option, but I just don't see that happening as a logical conclusion, because these guys, as they get more and more institutionalized and become more and more like a bank, what's the next step? How do they earn more yield? Well, they want to earn yield on. They've got to have, they want to do it both ways. So they're going to start lending out because they can earn more, the profits will go higher in that situation. I think it just is inevitable that it will get to that point. Maybe not initially. And I do, as I said before, I do think like this initial stage, this initial phase we're in right now is really a customer acquisition phase where they're offering this incredible sweetheart deal of, you're almost getting, the Treasuries yield rate kind of thing. And you're just getting much more than you can possibly get at a bank. And if the new regulations that come out sort of show the general public that this stuff is as safe as a bank, then boom, you've got like incredible sort of.
Yep.
So I see there's a lot of like crypto companies applying for bank charter licenses or banking licenses. Do we see the opposite? Do we see traditional banks trying to open up crypto wings?
Yeah.
And in the US, you've seen a lot of banks trying to offer their own stablecoin projects, for example. And we've talked about that on a few occasions where the banks have sort of like Citi and JP Morgan, obviously JP Morgan famously has its own coin, which is not really a retail offering, but Bank of America and a few of these other ones have combined to try and offer, they want people to be using their US dollar stablecoins.
Yeah, every bank would want customers to be using their stablecoin because they want to be the one that, owns it all.
And even in Australia, we saw some as well.
Yeah, definitely. There's a lot of opportunity there. And a lot of the banks are also, dipping their toes into crypto custody as well, which I think is, there was some legislation, I'm not well versed on this, but there was some legislation that came out, I think recently, and I don't know if it was in America or not, but it allowed banks to start custodying crypto.
I thought BNY had been one of those banks that had
that's what was on my head as well. I don't know exactly what it is, but yeah, so those things are definitely the wheels are turning there in terms of a bank playing in crypto, allowing people to trade crypto. Like, I think it's a matter of time. Banks will start buying crypto businesses that do the trading, like kind of what happened with us and IG. So IG, they're not a bank, I guess, but they wanted crypto exposure, and so they found a reputable, solid exchange that already does it and has the expertise and folded it in.
Yeah, and it makes sense. It makes sense. Well, this kind of leads into, I guess, the other sort of news that came out this week, which I'll touch on, which is the BUIDL, which is a tokenized version. There's that word again, tokenized version of US Treasuries being listed on Uniswap. Now, I found this particularly interesting. I've spent a little bit of time with the securitized guys, and a little bit about that offering. So I just found it interesting that there's now being listed on a DEX is a pretty important step. even if small at this stage, to, I guess, this idea of tokenization of everything. So perhaps if you'd like, how well do you know this topic, or do you want me to kind of run through from the basics?
Tell me what you know.
Well, what do I know? Things. So what's kind of interesting, I guess, about what Securitize are doing. So Securitize are a tokenization platform. Now they have, I guess, their whole business is around tokenizing real world funds, I guess. So it's not one of their largest funds, or in fact their largest fund is a BlackRock fund called BUIDL, which stands for BlackRock USD Institutional Digital Liquidity. But they've also a nice little play on the HODL sort of theme there. And effectively what that BlackRock fund is Treasuries, right? So it's allowing, and their play there really, and they've got like Securitize as a business. They offer, securitization as a service, plus sort of fund administration type of thing. But effectively they're a platform that allows people who've got crypto who want to park their money in traditional, money market products. But they also do private credit and private equity. But the BlackRock fund is their largest. And look, for example, like the minimum buy-in, it's still pretty limited to who can do it. It's a multiple billion-dollar fund, but you need a minimum buy-in of $5 million US. So, the play there for them is really about going, hey, crypto guys, do you need better treasury management because you want to get yield on you can't get yield on your tokens, but you can, you can park your money into our BUIDL fund and you can get, treasury yields.
Yield on the token. Yeah.
Highly liquid, and this money is effectively, on call for them. But you get a yield on your treasury management. So if you're a big crypto business and you're sitting on stacks of USDT or ETH, because they build across a number of chains like Sol and AVAX and others, you can park your money in there, in the BUIDL fund. And obviously, just given the fact that it's 2.18 billion, like a lot of people have chosen to do so. Yeah. So look, it's really interesting. I guess it's, to me, part of that, to be an investor in BUIDL, if we're speaking about that one specifically, you need to have 5 million spare just lying around to tip in there. So being on a DEX, and also in addition to having the funds, you also need to qualify as effectively an institutional buyer. It's still as an individual, unless you have significant assets, I believe you can't go and just buy that fund as it currently stands, or park your spare 5 million in there.
Yep.
So having it on a DEX, I guess it's kind of interesting because it's like, well, it will obviously increase, I guess, some elements of the liquidity for it, and obviously, and the market loved the fact that Uni was doing this, and we saw the token sort of rise off the back of this news.
Yeah.
But how that's going to interact with just regular people buying and selling this thing, the details are a little bit.
Yeah, I thought that was interesting too. So, Uniswap have partnered with these guys to list the market. It's not actual classic Uniswap, like you go to uniswap.com or whatever, and you're on the normal AMM markets, and anyone can list. It's a special one called UniswapX. So this is sort of more of a like professional fillers come in, and when you place an order, it's like an RFQ system. So you place an order. There's not sort of a AMM or an order book that you're placing it on. You request a quote. A filler will give you a quote, and if the filler can't do it, then it goes to a Dutch auction and gets filled that way, kind of thing. So the fillers are the sort of market makers that have been contracted onto this market to buy and sell the BUIDL against USDC, I think. So it's not your classic Uniswap, but it is definitely part of the Uniswap system. What I found probably most interesting about this story was that as part of this, BlackRock have bought a bunch of Uni tokens. So the Uniswap platform's, DAO token, basically. Now, big business like BlackRock has no business in buying a Uniswap token, right? They've got no business in,
or do they?
They've got no business in buying anything on chain, if you ask me. They should be using, ETFs or some kind of structured product to buy this kind of stuff. They don't just go on chain and buy things. And so to me, that's the most interesting part. What are they doing? Okay, why would you ever need the Uniswap token, the Uni token? Well, you need it to vote on the DAO. You want to hold it so you can make decisions and help influence the way that the DAO changes the protocol and does what it does with its treasury and all that kind of stuff. Like, these guys are getting involved in the DAO politics, basically. That's my view on this whole thing, and I find that very interesting and almost like a day one kind of thing that other big institutions haven't really done before. Most of them, when they're buying ETF, unless you're Sailor and you're buying, on Coinbase or whatever. Yeah, most of these other guys are buying ETFs, right? They're buying structured products. They're getting in the derivatives game and staying away from the physical. But these guys have now gone to the physical because they're getting involved in DeFi essentially, which is,
Hey, Larry.
I don't know what's going to happen next.
I'm not sure. Larry has been a huge advocate of tokenization and sees it as a large part of the.
So it's either they're trying to vote in the DAO or it's just some work experience kid that's a DJ.
Yeah, well, someone said we need to get some Uniswap tokens, and he's like, all right, I think I know how to do that.
All right, we've got a question. Skynet. So this one is for you, Nick, because we are already live with this across other jurisdictions. So I'll read out the question just for everyone who's listening. So thanks for the question, Skynet. So when the travel rule is active for VASPs in a few months, how will exchanges verify that customers are withdrawing to self-hosted wallets? Will it require just a declaration or signing proof? So we know this one well because I guess in other locations like Singapore, the travel rule has already been in effect for a long time. So yes, there are processes around this, which I'll...
Yeah, so in Singapore, as you mentioned, we've had this for years now. When MAS regulated or legislated stuff around crypto, that was one of their sort of requirements, was that we have a travel rule process in place to make sure that we identify the sender and receiver. Now, for those who don't know, travel rule is about identifying the sender and receiver in a transaction. It's not a crypto specific thing. It exists in traditional worlds. The SWIFT network is built around the travel rule basically. So when you're sending money internationally, the sender and receiver is identified as part of the transaction, and your SWIFT kind of package on the internet contains all of that information. Internally, within Australia, travel rules kind of it happens automatically because the banks are all connected, so it's not as a big a deal. But we see sort of governments now trying to make travel rule a thing for crypto, which is, I don't know, I'm going to take my independent reserve hat off here a little bit, and I kind of disagree with the general concept. I think it's a fool's errand in a way. You've got, you're trying to identify a receiver of a pseudo-anonymous wallet.
And it's a bit, to me, it's the old meme of like a paddock wide open with a fence right in the middle.
Yeah, it was just that one, the door right in the middle.
The door right in the middle. And it's
don't go around that door.
You're like, you've got no choice but to go through it. There's no other way around it. Because, anyway.
No, I agree. That's a good analogy. Because as soon as you get the crypto onto a personal wallet, then you can, there's nothing stopping you from sending it anywhere. And so if they're trying to enforce this stuff, what they're doing at the moment is they're trying to enforce crypto exchanges and regulated businesses from acting without the travel rule. So a regulated business like Independent Reserve would need to make sure that the sender and receiver of a transaction has been KYC'd, is known. We do that. So you mentioned a couple of interesting things here. Will it require just a declaration or a signing proof? So when we first opened up the travel rule stuff for Singapore, we could take one of 3 different ways of doing it, and one of them was a signing proof. And that was from a technical, if you're a nerd, that's kind of interesting and fun almost. You have to figure out how to get a wallet that can sign a transaction with your private keys, and we would put up a specific message, and the customer would need to sign that message with their private keys, and then we would be able to, using their public wallet address, verify that the signed message was from them, kind of thing. So, and that was fine. We probably saw maybe 2 or 3% uptake of that. It wasn't a very popular way of doing it because you need to be quite technical. A lot of wallets didn't support it at all. So Bitcoin, the biggest wallet back in the day was Electrum. Electrums definitely support it. But on the Ethereum side, we were using, I think it's called My Ethereum Wallet, was the only one that I could find that actually allowed you to sign and verify, without getting into the script and writing some application that did it. Eventually, we sort of, we've been in contact with the regulator a lot, and a lot of back and forth, blah, blah. And we settled on a declaration system. So you basically just declare that this is your wallet, and we don't allow third-party transfers, which means if you're sending to yourself, therefore there is no travel rule concerns.
And here's the thing I think it kind of does help with. I mean, we always get back to the scam issue, right? And, you want to make sure that you can verify as far as you can along the chain that whatever you've done, it's been all above board, right? And to the effect that sort of this has on, say, scams, for example, And I use an analogy with cash. Let's say, for example, you're a bank, you're trying to prevent fraud and scam, of course, but you quite happily, you can't bank recall someone kind of once, they've taken cash out. So if you take your cash out, decide to go to the casino or do something stupid with it, set it on fire or whatever you want to do, the travel rule is that you've put in your PIN and you've got your cash and all right, it's yours, you've taken it, go do whatever stupid thing you want with it. We're off the hook now for your decisions after this point. Digitally, for whatever reason, it doesn't seem to be that case, right? People get scammed with money, right? Digitally, or they send it to another, say for an exchange, and then the exchange then sends it to them. Then they get scammed. Then there's almost like a electronic linking, which kind of like hasn't got them off the hook yet. Do you know what I'm trying to say? And
because of the blockchain and traceability and all that stuff?
Yeah. So, ultimately, I still believe that it kind of comes down to personal responsibility with whatever you want to do with your money. And I don't want to see, no one wants to see scams, but if you take your money from the bank, put it to an exchange, buy USDT, and then get scammed with it.
Yeah.
I think now, if you get scammed out of your cash, it's kind of like everyone goes, hey, that's on you, buddy. But if you get scammed digitally along the line, everyone can kind of go back and go, hey, it wasn't my fault. Give it all back to me. It's all electronic. Give it back to me. Whereas once you get to the kind of travel rule where you've gone, no, you took it off the exchange, you went to you. After that,
I think you need to be careful here. So travel rule isn't about scams.
I know it's not about scams, but what I'm saying is
it's more like AML, that kind of stuff, right?
True, but then what do you do with it once? Then how do you then once you've taken it off to your own wallet?
If you send it off to yourself, like you send it to your own wallet, then you send it somewhere else. Like that's the same as cash, right? You're setting it on fire. No one can ask yourself to recall it.
That's what I'm saying. Yeah.
Yeah.
You see what I'm trying to say, but in effect, isn't it kind of just? It's kind of almost okay. Yes, I know the travel rule is on the face of it about AML, CTF, and all that kind of stuff. But it's kind of like the final checkpoint of going. Now you past the point of beyond return, and anything you do now is kind of on you.
Yeah, I mean, it could be seen that. I think that's sort of a side effect, maybe. But
okay, yeah, that's fair.
Yeah, I think that's not the purpose of the travel rule. In our case, because to break it down, the travel rule is about sending from one known customer to another known customer, so you know where it's going. The way that most exchanges are implementing that is by forcing customers to send it only to themselves. So that's not just the travel rule, right? If a customer sent it to another known entity, not themselves, which could be a scammer, that's still allowed under the travel rule because it's one known customer to another. And just the way that we can't possibly KYC everyone in the world and every wallet. So the way exchanges do this is by going, look, we'll only allow you, please just send it to your own self. You declare that this is your own wallet, and at that point, our KYC, our travel rule obligations are finished because we've sent it from one known entity, you, to another known entity, you. Yeah, and so how are we going to do this in Australia? I suppose is the next side of the question. It's a good question. I actually haven't spoken to our compliance guys specifically. As far as I know, it's going to just work the same way. So we'll just be doing a declaration. Signing, as cool as it is for technical people, and I'm all down for it, but it's just not practical. And as we saw, with the Singapore stuff, the take up was extremely low, and it's difficult, right? Even for a technical, even for our side, we were using tools that we were able to find that could sign it, but if the original signature isn't created in the same way as the verification is done, then you get a mismatch. And so it's because, these things can be done in multiple different ways. It just becomes very difficult. So at the moment, declaring is what we'll probably be doing. And as far as I know, the government is fine with that. Sorry, you're just making a lot of squeaking with your foot. Trying to be subtle about it. He's like, hey. Sorry, Russell, it's off screen again. So I don't know. Hopefully that answers the question. But
a question, I guess, about the technical tooling, and you might not know. I know that whenever we have an address that comes up, either a withdrawal or a send or a transfer, we have tooling that checks those wallet addresses against a known database of scammers and things like that. What's the limitation of that kind of tooling? How many hops do we go before?
It's discretionary, so
it
really the tooling that we use and the rules, I suppose, around the tooling is pretty complex. So it's not just if it's a bad address, then stop kind of thing. It's more like, as you say, how many hops is it? What percentage of the transfer is from a bad address? Because usually these things aren't 100%. Because the way blockchain works, change gets sent everywhere, and people split transactions and blah blah blah, and like things get lost along the way. So by the time some bad money gets to the exchange, often it's sort of 1% or 0.5% is bad. So there's a lot of different rules around the category of is it child porn? That's obviously super super bad. Is it some guy sending to an online pharmacy? It's like there's scales on how bad we consider things.
And I guess we probably wouldn't say the number if there was an operational hop limit. We probably wouldn't say.
Yeah, it's like if you want to get around our limit, here's how you do it. No, it's pretty sophisticated. So, yeah, as much as the libertarian in me wants to say, just like it's your money, do what you want with it, kind of thing. We have to and a lot of this stuff is scam related. So it's not necessarily AML stuff. It's more, not more, but it's just as much. These tools are aware of scams as well, and so we have to pay attention, because if we can stop customers getting scammed by using advanced tooling that customers just don't have, we're absolutely going to do it.
And everyone has to do their bit, because if you know something that the person who you're dealing with doesn't know, like you kind of have to tell them. Right?
Yeah, we're the experts here, so we want to try and do our best.
Decent human thing to do. Quantum of solace. All right, so that was a very long way to answer that question.
Yeah, well, it's an
thorough.
interesting question, and I do have a lot to say on it, because there's like libertarian, there's the personal privacy aspects of it, and there's the feasibility. Like I think, I'm not sure if I really went into that before, but the feasibility of doing travel rule on a blockchain is almost pointless. Like unless you get to a situation in society where there becomes two classes of blockchain transactions. One is from exchange to exchange, and it's all above board and nothing bad can possibly happen. And the other one is the dirty underworld of personal wallets. And you can you can do whatever you want under there. Like there's no travel rule, there's no KYC, there's no, and I feel like maybe eventually we do get to this situation where there is these two classes of transactions, and you have clean Bitcoin and you have dirty Bitcoin, and if clean Bitcoin somehow gets onto the dirty train, then that's it. It's dirty forever, and clean Bitcoin gets less and less, because you know what I'm saying. Like
that's like there's no difference between withdrawing $50 from the ATM and giving it to your friend around a corner in an alleyway.
Yeah, but that's really difficult.
It's not traceable. That's the problem.
I'm sure at some point in my wallet I've had a $50 note. Actually, that's not true. I've never had $50. I lost it all on home. But if I had a $5 note, and at some point that was maybe used in a drug deal, like that dollar's not tainted.
I mean, there is some stat out there, like where they tested a bunch of cash, and it's like 80% of them have cocaine on them. Or whatever.
Exactly.
It's like, okay,
should I be arrested now at the airport because like a $5 note has some drugs on it or something? Like,
no. But I guess the difference is there's, you can hand on heart say I had nothing to do with this, and that's a fair sort of thing to say with cash, but with crypto, it's much more murky, and it's because of the traceability. Because unless you're using Monero or Zcash or something where you can hide your transaction path.
Yeah, but how many hops away from you is it clean again?
Okay, well, again, like Jared pointed out, if everyone decides that the number is 50, then I'm just going to create 50 wallets and send it from one to the other. You know what I mean? Like it's trivial. Yeah. Anyway, we're not there yet, but at some point, I hope we don't.
I didn't realize the travel was such a passionate topic for you.
Yeah. I love and hate it at the same time. Anyway, yes, let's move on.
The quantum of solace. All right, this is so. Let's not talk too technical on this. Let's just talk about. Let's keep it conceptual, because this is all about the spectre of quantum computing and breaking everything. Seems to be back in the news.
Yep.
Is it overbaked? Is it not? Is it real? Is the threat real? This is the question. And why does everyone seem to think that if someone has quantum computing, first of all, who owns the quantum computing, and why are they going to go after Bitcoin straight away? I mean, there are so many more. You could just BUIDL, for example. Just go and steal all the treasuries, all the world's treasuries. Take them all.
The first thing I would do, obviously, is hack your email.
Yeah, you should. It's think of all the quality chat in there. You could be.
Why are you late on your repayment again? Okay. Well, let's get a little bit technical. Okay. So we need to frame this question. Right. So what is quantum? Quantum computers are things that can use quantum bits. We don't have this kind of technology in normal computers. In a normal computer, you got a bit, it's a 1 or a 0, the classic zeros and ones and all that kind of stuff. Quantum computers, the quantum bits can be in superpositions, which allow them to sort of be somewhere between a 1 and a 0. Like it gets really fancy. And with this technology, you can do things like break cryptography. So what does that mean for Bitcoin? Well, in Bitcoin, you have things called a public hash and a private key. You guys might have heard of that. A public key, sorry, not a public hash. Well, public hash is the address usually, but a public key is kind of the thing that you give out to people. So people send to your public key. The private key is the thing that allows you to spend from your wallet. With quantum computers and these fancy superpositioned quantum bits, it becomes technically feasible for people to turn a public key into a private key. Whereas currently with normal computing, it is infeasible. It'd take longer than the age of the universe to kind of do that stuff with our computers right now. Quantum computers kind of speeds this thing up in a big way. Is it possible right now? What's the threat? Right now, no, it's not possible. I think the biggest quantum computer, and I might be wrong on this one, but one of the big boy quantum computers is the one that a PC that Google made. It has 105 physical quantum bits. It is estimated that you would need something like, okay, and this is where it gets interesting actually. So this computer has 105 quantum bits. If you rewind a month or so, the estimation to break RSA 2048 encryption, which isn't Bitcoin encryption, this is actually more difficult than Bitcoin encryption, was something like 20 million physical quantum bits. You need a computer that could do that had 20 million physical quantum bits in it. As of maybe a month ago, some guys came in, wrote a paper and said, actually, we've figured out a different way to do this. They haven't changed the hardware, but they've changed the way they do things and different algorithms and whatever. And they got that from 20 down to about 900,000 quantum bits that you needed, which is a huge drop, right? Mm-hmm. And everyone was like, oh crap, like this quantum computing thing is happening quicker than we're expecting. Anyway, as of a few days ago, some new guys came in with a new thing and said, hey guys, 900,000, nice try. We're now down to 100,000.
But it's all theoretical.
This is all theoretical. They haven't actually built it. Obviously, as I said before, I think one of the bigger computers is 105 qubit. Google's quantum AI is, so that might be 65 logical. So Jared, for those who can't see, has just put up a note to me saying Google's quantum AI is 65 quantum bits. There's a difference between physical quantum bits and logical quantum bits. One logical quantum bit is a bit that sort of acts in a mostly error-free way. A physical quantum bit, because of the way quantum computing works, and it's all like crazy maths, but it usually has a lot of error. They're super error-prone. They can, like a change in the wind might change how the thing calculates stuff. So usually what you have is a bunch of physical quantum bits can make up one logical quantum bit, and that one logical bit is mostly error-free because there's a whole bunch of physical quantum bits under there doing calculations, double-checking error codes, all this kind of stuff, and finally comes up with a number that's got no errors in it. So that 65 might be 65 logical, but even then there's usually like 1,000 to 10,000 physical quantum bits per logical. So I'm not sure what that 65 is. Maybe I'm wrong. I thought it was 105. Anyway, that's the T. So quantum computing is suddenly accelerating. The ability of the quantum computers is theoretically, as you said, accelerating a lot quicker than we're expecting. What does this mean for Bitcoin? What does this mean for Ethereum? Well, it can mean bad stuff. So it can mean we can reverse a public key into a private key, and that means if I send funds somewhere, boom, you can see my public key, and you can grab that and turn it into a private key, and then send the rest of my funds somewhere else. How do we fix this kind of thing? Great question. The Ethereum Foundation has a kind of a roadmap for quantum resistance, it's called. So the path to quantum resistance is something that they were actively working on, which is great. I applaud them. Everyone should be doing this. Bitcoin has kind of still got a bunch of infighting, and there's a bunch of people complaining that it's not going to happen and it's pointless to try and fix it now because it's too far away. And I don't know, technology like AI, it's just accelerating at crazy pace. I think AI is probably going to these things are going to join up at some point, and AI is going to go, actually, here's how you do it. Instead of with 100,000 quantum bits, you can do it here with 50. Anyway, it's an interesting topic. The Bitcoin guys have released a new Bitcoin improvement protocol called BIP 360, which doesn't fix the quantum issue, but it it fixes a large surface area of the problem. So it creates a new address called a pay-to-Merkle root address, P2MR address, which again is a different sort of address format. So the existing Taproot addresses start with BC1. This one, if everything goes ahead, would start with BC1Z. So you'd see those addresses, you'd know you're using a safe address. But again, it's not safe forever. It's safe for a significant part of the quantum issue.
Mm-hmm.
There's still other bits here and there that need to be solved, and it will take a while. And we'll need new wallets built, and we'll need like a lot of infrastructure redone from the ground up, kind of thing. So it's a big issue. It's a long issue to solve. We should be looking at, in my opinion, we should be looking at this now, not later, because even if we solve it now, you can't force people to upgrade. It's a decentralized system. So we need to build stuff now, get it ready, get the word out there, and get people upgrading as quickly as possible, because these quantum computers are going at their own pace. We have no control over slowing
So
them
then
down.
the addresses like Satoshi's old wallet, which is still in the very old format.
Original one format, yeah.
And if it's unattended, if Satoshi's not a real person or is no longer around or is dead or is JD Vance, then that one would be prime for cracking. That's the biggest wallet, isn't it?
No, so as far as I understand it, you would need to send from the wallet first.
Okay.
So if no one uses the wallet, then the public key is not revealed, because all you have is the public hashed key. So you've got the public key that's been hashed by an algorithm. Hashing is like a one-way algorithm, so you can't go backwards. That's another interesting point, actually. So with the quantum computing, they do weaken hashing as well. So as some of you might know, all of the mining that happens in Bitcoin it goes through a hashing algorithm. And quantum computing doesn't break it open and destroy hashing. It just makes brute forcing hashing, which is the only way at the moment to go from a hash back to the original thing. You brute force it by trying a whole bunch of different stuff and seeing what works. It makes that about 50% easier. So we use SHA-256 hashing for the mining algorithm. It kind of is effectively similar to SHA-128 now. This is assuming quantum computing gets off the ground, but it is all theoretical at the moment. But yeah.
Yeah. So with the speed of the improvement of these things and applying it to stuff, is there like physical limitations around the actual ability to compute themselves? I mean, is it going to take so much power to actually, once we get to this level, or is it going to overheat so much that it'll just create a nuclear Armageddon at any rate?
Yeah, I actually don't know about the physical side of it. It's a good point.
Yeah, and so we still need the devices that can actually capture this computing power.
But I don't know if there's like the quantum side of it is kind of the interesting part. It's not sort of raw power, I think. But yeah, it's an interesting point. Like if they've made a computer with 65 quantum bits or 105 quantum bits or whatever it is, why can't they make it with 200? Why can't they make it with 2000?
Well,
you know what I mean?
Like
Like,
exponential increase once
that's
we
the
get
thing.
there.
Like, I don't know what's required to
we
increase.
need all the energy of a quasar to actually make it happen.
Yeah, it's a good question. I don't know the answer.
Well, so I said let's keep it conceptual, but
Yeah, sorry, I just can't help myself. You should have just taken it yourself, otherwise. So I mean, I feel like I stayed fairly high level. Like what's the problem? Quantum computing can reverse the private key, reverse the public key. Is it a problem right now? No. Can it be done in the future? It would appear so, but we're not there yet. But things are increasing at such a rapid pace that it's getting a bit scary, and we should I feel like the Bitcoin guys need to step up the game in a big way, because Ethereum have done it, and if it comes to a point where Bitcoin's insecure, but Ethereum have largely solved the problem, it's not a good look.
outstanding summary.
My best analogy, it's probably a really bad one, was in like the mid '90s where we were in Sydney. If you lived in Sydney, everyone was worried that you were going to run out of phone numbers, so everyone got a 9 in front of their number.
Oh yeah, that's right.
Yeah, and they had to change like all of the Pizza Hut ads.
9481111.
Chaos for like a good 2 months. Anyway.
Good 2 months, yeah.
Good 2 months.
People didn't know, yeah. How do they get my pizza? That's right. They added a 9. I mean, they must have added 8s and 7s and stuff to other bits.
It was 8s for Optus numbers and new business installs. And
Right.
it was 9 for everyone on old Telstra.
9 for landlines, I remember.
I'd love to go back to the 90s. One of the things that I'd love to do with my kids would be take them to an old-fashioned Pizza Hut with the roofs,
Oh yeah.
Because, sometimes you
There's
see an
still
old
a
Pizza
few
Hut.
of them.
Sometimes you see, well, not enough of them.
So there's one out in St Andrews. It's out near the back of Campbelltown area. I drive past it every now and then. It still has the all-you-can-eat and still has dine-in.
See, that's with the big red chairs and all that kind of stuff, like a proper like experience. Because like no matter what you do with those old Pizza Hut buildings, like everyone knows exactly what they were, because it's not like they were ever multi-purpose other than being a.
Pizza was a lot more premium back in the day, so an all-you-can-eat buffet made a lot more sense. All-you-can-eat pizza now just sounds like.
I mean, especially Pizza Hut pizza. Like, I'd send away the Pizza Hut pizza shops and bring back the sizzlers. In my mind,
yes,
like that was you got true sort of choice there. Whereas Pizza Hut, you're just eating like ham pineapple pizza over.
So there are 3 new sizzlers opening in Sydney.
Oh, all right. Give us the lowdown.
They all ran out of a lot of them went out of business over COVID, and there was one holdout that was kind of near Oatley, St George area. That last one closed, I think, 2022, 23. Because I went for a birthday party there, and they're opening 3 Western Sydney locations in the next few months.
Yeah, that'll be pretty popular.
Cheese bread.
Cheese, cheese
ice cream machine.
Damn. All right.
Yeah, okay. Maybe we'll do the next moonshot from Sizzler.
Can we make that happen? I'm sure we could. Oh, that would be good.
So talking about the 90s, did you know that the Dutch government has decided to bring in a 36% unrealised gain tax?
This is outrageous. This is.
I'll circle back. You'll see.
I want to know where this. I want to know how the connection is going to come. I'm mostly curious about that. But we went through this issue just in Australia recently, and I don't know anything about the Dutch tax system, but the idea of having a tax on unrealised gains is preposterous. Just
outrageous.
Absolutely outrageous in any way, shape or form. Because you can be down, but on paper up at a period of time, and you're going to pay tax. And now your bags are down, particularly in crypto. And hey, it's a volatile market, right?
If you're an ETH holder, you're like, what?
Imagine if you held ETH, from, I don't know, 2012 to like $6,000 and still holding it, and you have to pay away 50% of your gains that you don't have anymore.
If you were Treasury, you would just pump the markets the day before the end of the financial year, wouldn't you? Just for fun.
Yeah. What are they doing in Holland?
Yeah, so 36% tax on unrealised gains, which is, as we've just discussed, some crazy talk. Apparently it doesn't include property, but it does include other things, investments, crypto especially, which is going to be a big problem for a lot of people. A lot of people are super upset, as you can imagine. The reason why I'm going to link this back to the 90s. Did you know that, so in Australia, the way our tax system works with capital gains is you don't get taxed on unrealised gains yet. As you mentioned, there was a proposal to do it for SMSFs.
It's gone back though. It's gone back.
Which got knocked back, which is
crazy.
Thank God. But did you know that the capital gains? So you would know that if you hold an asset.
Wait. Do I know or do I not know?
Well, you'll know this bit. You'll know this bit. When you hold an asset for more than 1 year, you get a capital gains discount.
Yes.
So you get 50% off of your capital gains tax, basically. It wasn't always so. So back in the 90s...
I didn't know that, yes.
Yeah. Okay, well, maybe you can tell the rest of this story then.
Well, I don't know where you're going with it.
So back in the 90s...
It was pre-CGT assets, right?
So back in the 90s, you didn't get a capital gains discount. I think it was in September 99 that they ended that. But before that, what happened was your capital gains was indexed against CPI. So basically, if you own something and CPI rose 3% and your asset rose in price 3%, you would pay no capital gains when you sold it because it was just in line with inflation, which makes a lot of sense to me, right? You shouldn't be charged on inflation because that's kind of the government's doing in a way. But then they were like, you know what, this is way too hard. There's too many weird calculations that people have to do, that the ATO has to do to verify. It's just too much trouble. So they changed it to 50% tax. They said, look, on average, 50% is going to be about neutral with the old index against CPI method. Anyway, fast forward to today. It's been long enough. They've decided enough people have forgotten about that. It happened 27 years ago. And they're now talking about getting rid of the discount and not bringing back the CPI thing. Just plainly getting rid of the discount or reducing the discount. Or
just trying to squeeze the goose out of a few more feathers.
The middle class is getting hollowed out, I tell you.
It's outrageous. And before, I believe actually, feel free to fact check this, but I'm pretty sure 89 was when, if you held an asset, I guess most people nowadays probably haven't held an asset since whatever the month it was, 1989. it was pre-CGT. So if you had
Oh, no CGT at all.
Yeah, so there are people, like there's lots of people, like when,
Awesome.
you know, BHP and CBA and all those kind of ones first came out, and the, you know, boomers were picking up those things at pennies and have held on to them forever because they've just been on a one-way ride, you know, for the most part. You know, people didn't want to sell them because they were pre-CGT assets.
And are they sunsetted? Like that, you know, even today you still don't pay CGT?
I believe so, yeah.
Oh,
It's
good.
been a while since I've looked at that stuff.
Oh,
And this is definitely not financial advice. Go and talk to someone.
1989, I wasn't doing much in investing. I was
Yeah.
thinking about primary school.
Yeah, I was going to say, oh, well, I mean, none of us would have been, but I'm pretty sure my mother-in-law still has her house from back then. And it's like one of the reasons she's holding on to it. It's like
an investment property.
No, oh, maybe, yeah.
Well,
maybe.
your own
I can't
home's
remember.
CGT free.
There's been
anyway.
chat about it.
But yeah, look, you know, again, talk to your accountant. Would definitely take advice from us. But I'm pretty sure.
Well, I mean, it's too late now. Unless you've got a time machine, go back and buy something in 1988.
Yeah.
Quantum will split the network because of the lost coins. Some will want to freeze burn. Sorry, this is a question or a statement from Skynet. Quantum will split the network because of the lost coins. Some will want to freeze
I'll read.
and burn others.
Do you want to read out?
Go for it.
Okay. Quantum will split the network because of the lost coins. Some will want to freeze / burn
That was
others.
much better than me. Thank you.
Well, you're just doing it so quiet.
Okay, sorry.
Can you? Okay, do it again with some vigor.
Yeah, please.
That was like his, only worse.
Sorry, you just have to log into the chat and read it yourself. Nick's made me too self-conscious about my reading.
Sorry, I'm just trying to read
This
this.
has gone from bad to worse.
So, Quantum will split the network because of the lost coins. Some will want to freeze and burn, others will want to allow them to be scooped up by QC. Project 11 has a full list of all quantum vulnerable coins on their site, and Satoshi's coins are in the original PKPK address, so public keys are visible.
Oh, okay.
Interesting. Excellent reading, Jared.
That's interesting. So I did hear another theory about the current drop in prices. It was that people were pricing in the Satoshi coins getting stolen and dumped. And this kind of like lends some credence to that. And you know that'd be good because I mean if that inevitable dump is priced in,
Okay.
it's up only from here. Like what else can make it go down?
Is it, you know, there's this idea called the super cycle, Nick. Maybe this is the catalyst, is what we needed. No, we've been following the cycle theory almost to the T, unfortunately, for the super cycles out there.
Yeah.
Is that a good or bad thing? Look, I don't know. Hey, look, we've got something about to pop up.
Okay,
Let's do this. Let's get the image up there first before we discuss it.
all right. There's a bit of an explanation behind it too. So, this here is Draco Malfoy from the original Harry Potter universe, and his face has been co-opted into Chinese New Year, and he's become the unofficial slogan for the Chinese New Year 26 years after the fact. Now, there's a reason behind it. The name Malfoy in Chinese has a horse meaning.
Yeah, okay. A horse
And
meaning.
I don't know the exact term. It's something like horses run or horses charge. And so the name Draco Malfoy has like a strong year of the horse resonance. And so
There's an interesting
he's
factoid.
leaning into it and sharing all of these Gongxi Fa Choi Draco Malfoy memes. So that's
Good
that's
work,
why
Golden
you might
Hair.
see it. Yeah.
The actor who plays that guy, do either of you know who
Tom
it is?
Lenton?
Tom
Oh, Fenton?
Felton?
Felton.
Well, he'd be like an adult now. He wouldn't.
Yeah,
look
yeah,
anything like that.
he's like maybe our age almost. He's like a full-on legend. Like that guy leaned into the evil Draco and Malfoy thing for years. It was so good. Is that what he looks like? Oh my gosh, I've seen him in other
You
things.
got to share that. Wow, that's Draco Malfoy. You wouldn't even be able to pick him out of a lineup.
No, I don't think I'd get it. Yeah,
Once we get him up.
and I don't know. I've seen him in a couple of other things, and they're all great. Like I think he's fantastic. Just leans into the evil thing. Sometimes he's not evil, but he's just awesome. Anyway,
That's incredible. That's
not who I've seen him. It doesn't look like that in the movies I've seen. You sure that's him?
It's like
Elijah Wood on
it's like Joffrey out of Game of Thrones. Like
Yeah.
that guy nailed it so
Yeah,
well that
he's so evil.
everyone generally thought he was an evil dude. He
Yeah,
was probably a
yeah.
really
If you
nice
end up
guy.
hating a character, they're an amazing actor.
Yeah.
I mean, he just nailed it so bad. He
Agreed.
should. But where's Joffrey? Like, where's?
I have
Joffrey?
seen him in some things. So he was in. He was in The Sandman, I think. Have you ever seen that? It's a Netflix show. It was a really good show. I enjoyed that. High production value.
Oh, look
Yeah.
at Joffrey now. Bring
He's got a
that up.
moustache. Okay, that's not what he looked like in the one I saw.
No,
He
he's a great example. I mean, he nailed that role so well that like you almost
Yeah,
become.
yeah.
This guy
Absolutely.
looks like he should be on a list.
And now look. Well, here we go. Now have a look at Joffrey these days. Bang. Doesn't seem like a bad guy.
No,
He seems like
Definitely
he's smiling and stuff.
in the thing that
Selling
I
fax machines.
I mean, the thing I saw him in, he didn't have a moustache, but he was playing. If you know the Shakespeare, is it the Tempest? The one where there's Puck. You know,
Oh
the
yeah,
little
it's
like
Midsummer Night's Dream.
Yeah, that's the one. Midsummer Night's Dream.
We've been
And-
through this because remember I had my brief acting career. I played one of those characters.
Were you Puck?
I can't remember.
Oh, okay. Anyway,
It's
he
in year
plays
8.
Puck, which is like a very naughty kind of impish guy, and he's just perfect for it. Like he's really good.
Yeah. My
Yeah,
one
what's-
look, like I said before, we thought you were going to be in a movie many times ago. We spoke of this for a while,
Oh,
and
that's
I
right,
have
yeah.
I've my brief acting career, which lasted for 6 months during mandatory drama class in year 8.
And you were
was terrible at it.
you were a tree.
Hey, someone's got to be the tree,
You
man.
were believable.
And I was tall. I was tall.
I mean, we could have got a real tree, like. You know how when they put like white actors playing black roles and stuff like that, and they're
Yeah.
whitewashing whatever.
What are you talking
were-
about? That is Jared behind you the whole time.
Yeah, he's a tree.
Jared plays our trees. That's not the real Jared you see popping up on the screen like Dickie Nee.
Yeah.
That's just
He's
AI.
actually-
That's AI. That's
Get
the
away.
AI interpretation of him.
All right. Have we talked enough?
Oh, we've talked enough. We're done, I guess.
What else? No, there's nothing else. I think we're good.
All right. Well, thank you again for stopping by. Twitter wasn't working, so it looked like Jared was the only one who stopped by. But maybe we had some people listening.
It's just
Anyway.
no one's around.
It's good. We're back now.
Bitcoin prediction
We
for
can
next
say
week.
this. So we're making no. We don't make predictions because we know it's going to make it look silly.
So yeah, there's.
Nick's
we'll
going to
get
into it anyway.
Yes, sir. Here's what we're going to get to. No, I've seen a lot of. We're at the area of the cycle, the part of the cycle where people are making these bearish predictions. I feel. So I remember back in like the 2022 part of the cycle where we were sort of bearish times. And I think the price is like around the $20,000 mark, and people are going, "Oh, it's going to tap like 11,000. It's going to get to 10,000." Blah blah. Anyway, never got there. Got to like 16 for a brief period, and then pumped up again. I'm seeing numbers like we have to get to 29K, or like it's getting to 45 definitely, and I'm like this kind of gives me hope that we're probably not going to get to those kind of numbers because I feel like we're just already in that part of the cycle. I think I mentioned, or we might not have, but it just really feels like we're speed running this bear cycle, right? It's going so quickly down with no apparent, reason. I hope we don't get to 45 or 29 for sure, but I do think we've got probably more down to go. So maybe we'll see the 50s. That's my prediction.
I'm not gonna put my neck out there.
Fine.
But I'll see you next week.
Boring.
All right.